Hi, my name is Rudon Bastian, and this is my graduate research project and presentation on performance review process. Dr. Ann Sanchez, Amberton University. This graduate project will share knowledge and understanding of performance management systems, identifying proper structure and components that constitutes to a successful system, which can essentially encourage organization success. To compound findings, included will be scholarly peer-reviewed information. These references will ensure a thorough understanding for the need for organizations to have performance management systems. This graduate project seeks to illuminate the issues that Wells Fargo is facing amid the lack of an effective performance management system and review system. Presentation expectations. The expectations are to understand the importance of performance management systems, how to conduct or implement performance management, how to identify the need for a performance management system, and understand human resources' role in successful performance management systems. Organization overview. Wells Fargo. Wells Fargo was established on March 18, 1852 by Henry Wells and William G. Fargo. Wells Fargo is a diverse consumer and community-based financial service organization. Since the opening of the first branch, Wells Fargo has engaged in consumer banking, insurance, investing, consumer and commercial or business finance, and mortgage or lending. The community banking aspect of the organization offers many products for a diversified group of consumers. These include checking and savings accounts, credit and debit cards, auto loans, line of credit accounts, mortgages, and student loan options. Wells Fargo has recorded a $1.9 trillion in assets as of 2017. They provide and continue to provide service to over 800 locations, 13,000 plus ATMs and growing, the internet and mobile banking. Wells Fargo has locations in over 42 countries with over 200,000 employees as of 2017. Wells Fargo's mission statement. Wells Fargo's mission is to help successful business owners, retirees, and families with their financial goals through sensible investment strategies. Their professional commitment is to provide excellent service to their unique service matrix and envision process. In this process, they hope to become a valuable, trusted resource worthy of clients' loyalty and friendship. Wells Fargo's values. 5 values guide every action we, Wells Fargo, take. 1. What's right for the consumers or customers, exceeding expectations and building relationships. 2. Using people as a competitive advantage, retaining employees by motivating and developing them. 3. Ethics, committed to highest standard of integrity. Essentially, we do the right thing. 4. Diversity and inclusion, recruiting a broad range of people from different backgrounds to complement our mission. 5. Leadership, we allow everyone to lead themselves. The goals of being responsible and self-sufficient for themselves and each other. Vision statement, we want to satisfy our customers' financial needs and help them succeed financially. Wells Fargo's goals. We want to become the financial service leader in these areas: customer service and advice, team member engagement, technology and innovation, risk management, philanthropy and community impact, shareholder value. Industry type of Wells Fargo. Wells Fargo competes in the finance sector of the major banks industry. Potential risk. Wells Fargo is in risk of internal control weakness, the declining confidence and loyalty of clients, numerous sanctions, negative rumors and investigations, creating a bad reputation for the organization and its business practices, and performance management system not implemented properly due to weak management not committing to its implementation. Performance management risk. The employees at Wells Fargo typically work for the organization less than a year due to Wells Fargo lacking in employee retention. There is a clear detach from the upper management or executives and lower level employees. They tend to conduct reviews spontaneous, which creates negative reactions such as uproars from employees. Upper management engage in acts that are not beneficial for employee production, such as pointing fingers, no open door communication policy, and employees aren't allowed to give rebuttals or express concerns about results or reviews. Wells Fargo fourth quarter reports and net income. Wells Fargo recorded a net income of $22 billion, showing a $0.3 billion increase from the prior year. The revenue of $88.4 billion increased from $88.3 billion. Average deposits dropped 4%. Average loans went down 1%. And the net interest income of $12.3 billion down $136 million from the previous year. This student believes Wells Fargo managed to surpass the prior year net income by eliminating or losing employees, having a smaller staff, thus saving more money. Wells Fargo technological implementations. Wells Fargo initially launched its internet banking service May 18, 1985, offering customers online access to their accounts. They used a platform called Quicken and Money. This software included photos of employees in action, maps of stores and ATM locations, product information, as well as customer service numbers. As the years went by, they offered more services online. These include and not limited to online bill pay, online investing, secure website features, and mobile banking, including Apple Wallet and most recently MasterCard Pass and Apple Pay. Wells Fargo, as of 2016, reached over 25 million online and mobile customers. Performance management. Performance management is a continuous, non-stop process of influencing the alignment of employees' overall work presence to that of the organization. Within performance management systems, there must be a great emphasis placed on the design, goals of the individuals and organizations, long-term and short-term goals, job analysis, which is the understanding, learning, role training, and specifications, plus follow-up after implementation has been completed. This student thinks that Wells Fargo's present performance management system needs to be re-evaluated and a new, more target-specific system to be implemented, one that places emphasis on team goals, individual goals, as well as open chains of communication between superiors and lower level employees. The student also thinks that this will encourage positive practices within the organization and help with employee retention. HR, or human resources, role in performance management. Human resources is a critical aspect in execution and design of performance management systems. They help by avoiding litigations. Almost every action in organizations are subject to lawsuit, especially if done carelessly, whether within or outside the organization. HR's role is to mitigate these risks by effectively facilitating the performance management process, which includes documentation, data collection, and storage. Human resources organizes employee reviews, manage eligibilities for employee rewards and or punishment, facilitates recruitment and retention of employees, and is responsible for distribution or administering training and development for all employees. This includes coaching for lower and management employees. Data and performance management. It is necessary for the collection of data within performance management. There are three kinds of data collection that are performance management specific. They include objective data, subjective data, and contextual data. Objective data relates to employee performance and productivity. Subjective data involves evaluation of employees and associates by customers, managers, and coworkers using some form of rating scale. Contextual data includes quality of work, such as employees processing in a timely manner, absentee rates, their ability to work well with other employees and follow rules and guidelines of the organization. The present performance management system at Wells Fargo. The Sherman and Sterling report 2017 indicated that there is a significant disconnect between Wells Fargo's business model and what the performance management system promotes. Wells Fargo spends millions of dollars annually due to high turnover rates and low retention. Little to no training is implemented for leaders or management. This promotes poor business practices that has questioned their legitimacy as well as their reputation. Employees are trumpeted based on their high sales rather than the quality of the sales. Lower level employees feel overworked and underappreciated, and there is no opportunity for development. By this, an example is that tuition reimbursement is offered, but upon degree or certification completion, there is no opportunity for advancement or promotions. Performance reviews and its role in performance management systems. A performance review or performance reviews are extremely important aspects of employee growth and development. These reviews, when executed properly, serve as fair assessment of individuals' performance. Performance reviews are conducted to discuss job performance, set goals for development of career, establish acknowledgement of organizational objectives, and discuss expectations and accomplishments. Within performance reviews, a key element is providing feedback in a timely fashion. Performance reviews provide the atmosphere for reviewers and reviewees to identify weaknesses and strengths. Performance reviews encourage healthy workplace relationships between management and lower rank employees. This student suggests that Wells Fargo incorporate an effective performance review regularly, being that performance management is an all-around process reviews should be as well. Human resources role in performance review. HR ensures that employees know exactly where they stand in relation to achieving goals relating to organizational standards. They help organize and retain employees who contributed to overall success of organization. They ensure the fair treatment of all employees. They communicate or promote effective communication of the expectations of employees by the organization. They ensure that the laws are known and complied to avoid lawsuits, and they ensure that the performance management system is implemented properly so that it possesses elements such as goal setting, reviews or appraisals, and follow-ups. Employee performance versus team performance review. Employee performance reviews are typically on a one-on-one basis versus team, which are usually done in group settings. Employee performance reviews, the results are kept between the involved individuals, typically the employee and the manager. As for team performance reviews, results are made known to all the individuals within the group. With employee performance reviews, they assess the performance of the one individual as it relates to the organization's expectations. And with team performance reviews, they assess the performance of the group as a whole as it relates to organization standards. Wells Fargo's review system lacks an efficient review system. Employees are given printouts of their performance without any verbal coaching or identifying strengths or weaknesses, thus compounding the environment for the disconnect between management and employees. Performance management and review. The needs, members and association. The needs are data gathering and storing, data analysis and employee development, feedback and follow-up. Members are the organization, management and lower ranked employees. The association. Feedback between all levels indicates what is expected and how well employees are doing in comparison to organization standards. Members, goals, needs, and associations of Wells Fargo. Wells Fargo lacked method of properly retaining employees. The performance management system implemented intends to retain employees, providing basis for loyal employees. Due to the improper implementation within this performance management system, this student believes the employees are not retained, causing organization to hemorrhage resources. Goals. Wells Fargo intends to revolutionize the customer experience with providing innovative ways in banking, ensuring team members are at the forefront of operations while minimizing risks. The student also thinks Wells Fargo is failing in this area. Employees feel mistreated and not valued. This failure is creating a gap within the knowledge and experience of employees. Needs to ensure Wells Fargo's turnaround in a positive direction. The new performance management has to include data gathering, work performance, development of employees, a feedback system, and a follow-up, aligning the strategic goals to that of the organization goals. Association. By implementing a performance management review system, Wells Fargo employees can receive efficient and effective feedback and identify the strengths and weaknesses, thus ensuring positive practices. Goals of performance management. The goals are to identify and address weaknesses in the organization, to ensure efficient communication and feedback exists between superiors and lower ranked employees, to align personal goals, strategic goals, and organizational goals, and to ensure a way that employees' level of work or work performance is measured accurately and the data is collected. The benefits of performance management. Some benefits include helping with documenting data in which could be used to either promote employees, terminate employees, or compensate employees for doing good work or performance. To help in creating a platform for proper feedback, employee motivation, identifying those exceeding performance standards, rewarding them at the same time, motivating others to aspire towards achieving something, assisting in retention of employees. Employees feel valued, boosting morale as well as loyalty to the organization. And the training needs are identified and proper, correct training is given to those in need to fill the knowledge gaps. Key components of a performance management system. They are the prerequisites, performance planning, performance execution, performance assessment, performance review, and performance renewal and recontracting. Prerequisites. Within this component, knowledge of the organization and its strategies and mission, as well as the description of the position or role, must be known. Wells Fargo employee must know or be informed about the organization's objectives, mission, strategy, and the objectives of the role in question to be proficient. Strategic goal is a form of forecast of which the organization wants to be at in the future. Employees must ensure their goals are aligned with the organization's. Job knowledge at Wells Fargo, determining key characteristics and KSAs that are necessary to be successful in the job or role. Essentially, they must know what the employees do on the job. At Wells Fargo, prerequisites include GEDs, the TOEFL for non-English speakers, English as a primary language. Other prerequisites may include Microsoft Excel and Word proficiency, and 1 year of sales and cash handling experience. Performance planning. Wells Fargo has to ensure that employees are introduced to performance planning and also checkpointing through the year. Management will continuously evaluate employees to ensure they are staying on path, which was formulated earlier in the cycle, ensuring these goals are aligned. Wells Fargo will indicate to employees the outcome that each employee needs to perform, the results including the key accountabilities, common objectives, and performance standard. Accountabilities of Wells Fargo. Description of the job will be established immediately, informing employees of what it takes to do the job effectively and be efficient. Objectives of Wells Fargo. Wells Fargo will set measurable outcomes by giving specific statements that compound directions in which employees are trying to obtain. Performance standards of Wells Fargo. Wells Fargo will ensure a way to effectively manage employee performance, indicating what is good versus mediocre performance. And Wells Fargo employees will ensure a pleasant transaction with focus on relating to consumer management, connecting with employees to gain trust and encourage open communication. Key components. Behaviors. How employees at Wells Fargo act and react to stimuli, which is client or their work, in the working environment, exhibiting attributes or KSAs. Performance assessment. This is one of the critical parts of the process, where both employee and manager evaluate performance, identifying if employee is achieving what he or she promised to achieve. Wells Fargo associates, managers, and employees will have a shared responsibility in this step. Both will submit appraisal forms to show results are trustworthy and show no favoritism. Performance review. This is the single most important step in the process. The employees and manager discuss performance and receive feedback. Essentially, this is where development of the employee takes its course. Employees who perform exceptionally are typically offered incentives, rewards, or even promotions. And there is also a follow-up of how to continue performing to standards or establishing exceptional performance. This will be discussed. Performance renewal and recontracting. This stage is the same as the performance planning, other than the renewal and recontracting uses data from past steps or phases. This phase or step, there is only a continuous cycle, so it does not end here, it just restarts. Issues that exist within performance reviews. Managers are sometimes not inclined to issue bad reviews to be disliked. This is one of the main issues in performance reviews. Also, managers may tend to be biased towards certain employees due to friendships or relationships built or started on the work premises. Management sometimes is not invested fully in the process. This can be due to busy schedules, etc. Employees may not be motivated. Sometimes document is not stored properly or unable to be retrieved. Rebuttals to results by either manager or employees are not warranted. And a familiar issue usually stems from compensation or employees thinking that they deserve compensation. And that is my graduate research project on performance management and performance reviews. I hope you guys at least grasped some of my concept and enjoyed some of it. Again, thank you. And references that I used for this project. And following this will be a 10-minute question and answer period by Dr. Ann Sanchez, where you can ask anything about the paper or anything about the business that's relating to banking and their practices that are somewhat illegitimate. And again, thank you. Have a good day.